China. Could their economic collapse be good for Bitcoin? Well, you're still doubting that we're about to enter the next phase of the bull market. We've all focused on the Wall Street Bitcoin ETFs, the Fed's monetary policy, man. They're cutting rates finally. Woo! However, we forget that on the other side of the Pacific is China. With a GDP of $18 trillion, is the world's second freaking biggest economy by far. And they are about to turn on the money printers in a serious way. And this could pump Bitcoin like crazy. So give me less than 10 minutes of your time. We're going to dive in and learn what the heck is going on and how this could affect your crypto bags. Look, China has been the world's fastest growing economy since the 1980s. It's been a beast. Its rise to wealth and power is nothing short of just, well, spectacular. This massive economic choo-choo China train has been fueled, of course, by rapid industrialization on mainland China, massive urbanization, and a significant increase in consumer spending. The low cost of production in China has made the country the world's factory. Everything's made in China, as you've probably noticed. The export-driven economy has undoubtedly played a very big role in the country's rise to power and to being the economic powerhouse that it is today. In 2023, the USA imported $448 billion worth of Chinese goods. That's a lot of cheddar, man. For context, that is bigger than the GDPs of some countries like New Zealand, or Denmark. Crazy stuff. Now, according to the World Bank, the country's GDP growth has averaged over 9% per year, lifting almost 800 million people out of poverty and making China an upper middle income country. Pretty cool. However, if there is one thing that I have learned from looking at the charts, nothing goes up forever. Not even China's economy. The Chinese economic engine is starting to lose a bit of steam. There's been a bit of an economic crisis. Doom and gloom are hanging over the Asian market right now because of some pretty disappointing data that has been coming from China. And while everyone's saying it's going to go low forever, we're probably nearing a lower point on a lot of this data, meaning the money printing that will come soon. We could lift everything up pretty fast. Now, for one, the Chinese industrial output growth slowed to a 5-month low in August. It slowed from an expansion rate of 5.1% in July to just 4.5% last month, missing the expected 4.8% growth. It is still expanding, but the growth rate is definitely in a downward trajectory, which is not great. And that is not the end of it. Retail sales and new home prices in China have also weakened significantly. Retail sales, which measure consumption, of course, rose by just 2.1% in August. So still going up, despite the peak season of summer, though, where travel and all that stuff happens a lot. So it's not as good as it could have been. This is also a big drop from July's 2.7% figure and well below the analysts' 2.5% increase for the year that they expected. The property sector, as you've probably heard many times, many YouTube videos, is also dragging on the economy. The Chinese property miracle has ended. The country's new home prices fell at the fastest pace in more than 9 years this August. New home prices were down 5.3% from last year. Ouch. The fastest since May of 2015. They've also been falling for 14 straight damn months, meaning we're probably close to a low point or bottom than not. According to Bloomberg News, China may cut interest rates on over $5 trillion in outstanding mortgages as early as this month, providing a lot of relief, of course, for all those homeowners and property investors. The job sector in China also in trouble. The country's nationwide survey-based jobless rate increased to 5.3% in August from 5.2% in July. A lot of people even said global economy right now is not a U.S. problem. It's a China problem, by the way. And look, anyway, all this stuff's not really a surprise as factory output winds down, which also means that unemployment will go up because employment gets affected when people are not buying as much stuff globally. With a higher unemployment rate, consumers will have less money to spend on goods, which becomes a cyclical problem. This will in turn affect manufacturers, and the cycle, of course, just goes round and round and round and round and round until you hit a rock bottom, and then things start to go back up. Now, before we get into some more implications of this and some more dirty numbers, I want to take a quick second to let you know about the Wealth Mastery newsletter. This is your weekly guide to the cryptocurrency markets. Look, our readers love it. I'm sure you will too. And here's why. Quite simple. It's awesome. No, look, every week, my team researchers and I, we are working very hard to help you stay ahead of the curve in this super fast moving market. We want to help you save your time and help you find the latest and greatest insights on altcoins, meme coins, airdrops, DeFi, charts, and much, much more. You can join our 140,000 plus weekly readers for free using the link down below in the description or the pinned comment over on X. Go check it out. It's free. It's awesome. Love it. Okay, China. Look, with all this negative data coming out, it's no wonder, of course, the Chinese stock market fallen pretty bad, man. Chinese stocks have dropped to the lowest level in 5.5 years. Ouch. Well, U.S. stocks, of course, are hitting all-time highs. It's a bigger slap in the face. The CSI 300, the Chinese counterpart of the U.S. S&P 500, has declined by over 14% since May and is down almost 50% since 2020. Again, maybe there's an interesting buying opportunity over there for Chinese stocks, huh? We haven't seen Chinese stocks looking pretty good. Anyway, unless something drastic is done, Chinese stocks are on their way to a 4-year losing streak. The number of startups in China has also dwindled as money just dwindles overall, the wealth effect going down because people aren't feeling rich right now. People are feeling the pinch. After the US, China was the best venture capital destination in the world, but that's in the past now. From the 2018 peak of having more than 51,000 startups, the number has dropped to a mere 260. 260. What? We're down from 51,000 to 260 in 2024. What the heck is going on? China. And just to put the icing on the cake here to all these negative factors, China's population, more than 1.4 billion, also facing a major crisis. The population is in decline. Falling population will have several negative impacts on any economy, okay? Because with fewer people entering into the workforce, there is a chance, of course, of having a labor market shortage, which can, of course, then hinder growth. AI and robotics. Now, that might be a solution. And of course, China is a global leader in that, but labor shortage is not the only issue. See, as the population declines, the proportion of elderly people increases. Fewer kids, more old people. This puts all kinds of strains on public resources like the healthcare system and the pension funds, all this kind of stuff. You have lots of old people not working. I guess you need robots to take care of them all. With fewer workers, there will be fewer people contributing, of course, to the Ponzi scheme that we like to call Social Security. And with fewer workers, there will also be less demand for goods. Nobody has any money except the robots, I guess. There can also be a decline in innovation, since, of course, a smaller population can result in fewer people contributing new ideas. Can we all just start having babies again? Lots and lots of babies. Are you doing your part? I got two. We're going to make some more. Make more babies, everybody. Come on. Keep screwing around, but, make it happen. Come on, make babies. Anyway, fewer people, less taxes, all that kind of stuff. Look, the list just goes on of all the negative effects, right? Now, look, there's a silver lining to all this. Okay. I know you're thinking, Lark, what about crypto bags? Okay. I don't think any government or central bank would allow the economy just to succumb to a free fall without trying to do something. China is no exception. The Chinese need to step up their stimulus game big time if they want to save their economy. Now, economists are currently calling for an unprecedented, listen to this, unprecedented 1.4 trillion with a T dollar shock and awe stimulus package to revive China's falling economy. That's a lot of money, man. It's a lot of money. That would inject much needed liquidity into China, but also global markets, and Bitcoin will benefit from that massively. I can already hear the Chinese money printers buzzing in the background. Bzzz. It's coming. Now, how does this affect your crypto bags directly? See, when and if China turns on the money printers, there will simply be more money circulating out there in the global economy. Global M2 money supply will go up dramatically in this situation. With the increase in monetary supply, more money, of course, gets entered into the system that can be used to expand businesses. That can be used to create more jobs. More people have more money. There's more wealth effect. Property prices start going back up. All that kind of stuff. And they come and buy risky assets. They buy your Bitcoin. They buy your dog coins, man, which we really want at the end of the day. With business expansion comes an increase in employment rates, more consumption, grows your economic outlooks. Big and small investors, they start looking to diversify, of course, into those riskier assets. Okay, not just the dog coins. They'll probably buy Bitcoin too, I guess. Why not? Increased demand will pump up the prices. The volatility will further attract other investors. We go through a whole new cycle until we crash down again. But we go higher first. This creates positive feedback loops, which could propel us, of course, to new highs. Don't fade China's money printing. And I'm not the only one who thinks this. BitMEXC co-founder Arthur Hayes, he said that the U.S. Treasury will inject between $300 billion $1.1 trillion before the year ends, after which China will finally release its long-awaited bazooka stimulus of 1.4 trillion. Maybe they don't do that. Maybe they just do a trillion. Don't need the 0.4 on there. It makes it messy. Just do a trillion, guys. Look, I'm not sure if I agree with his $1 million Bitcoin prediction in 2025. That's about Arthur Hayes. I think that's way too much. 200K feels like an absolute top for me. But the combined stimulus from two of the largest economies in the world will definitely move the needle on risk assets. So I hope you got your bags ready. Thanks for watching.